everyone. Welcome to our video podcast, The Breakfastbanter. I am Anita, and with me I have my co-host Ron Howard. Together we are MH Consultants, and today is a very interesting topic that we have to discuss. Ron?
Yes, a very topical subject. I wrote this podcast before the recent changes proposed for VAT, so maybe I was prescient on that, who knows. The podcast is called Beyond VAT ? So we'll see where we go with that.
Excellent. So, Ron, I think there are so many advantages of living in this country, right? I mean, it's culturally so diverse, it's so friendly, you can open businesses here, and the government supports you with so many different type of schemes. Overall, such a healthy environment, and with the recent inclusion of VAT last year, a lot of things seem to have changed. What do you think about Bahrain, and where is it heading now?
Well, certainly there are lots of advantages to living in Bahrain. One of them is that the taxes were low.
Yes.
And there's no corporation tax or income tax.
Yes.
So it's called VAT with a question mark, is because we're going to be asking questions about where the tax regime may go. We're going to discuss both corporate and personal taxes, which we hope will never be introduced, and we don't have the answers. But whatever the answers are, I'm sure that any legislation that comes in, the government will introduce it for the benefit of the country and its citizens and residents.
Absolutely. I mean, while you are an expert on VAT and all kinds of taxes and such, as an entrepreneur myself, I do understand there are two types of taxes, the direct tax and the indirect tax. Do you want to throw some light on it?
Indeed, there are. So the direct tax at the moment, corporation tax in Bahrain is at 0%.
Okay.
Except for companies engaged in the exploration, production and refining of hydrocarbons.
Right.
Where it's 6%, 46% of the profits made. So basically oil and gas.
Okay.
Yes. Hence, for other SMEs, the taxes are 0%.
Yes.
Compare this with corporation tax in the UK, which is 19%, and can reach 30% in India.
Yes, it is.
So
30%.
Big differences.
Yes.
There's also no income tax in Bahrain. 1% social insurance tax is paid by employees. We would call that national insurance in the UK. So when you get salary as an individual, you basically receive all of your salary.
Yes.
You're not having a lot of tax taken off.
That's right.
Compare again this with the UK, where the highest rate of tax is 45%, and I think 30% in India.
Yes, it is 30%.
Right.
Yes.
Oh, I got that right then.
Yes, it is.
Okay.
Yeah.
Capital gains tax, that's when you sell your business or you sell property. There's no capital gains tax here.
Yeah.
And 100% of the profits are yours. So
Absolutely.
Sell this business and the profits are all ours.
Yours, yes.
In the UK, that rate can go as high as 28%.
Wow.
And I think in India up to 20%.
I think so too, but I'm not entirely
Well,
sure.
that's why I always say I think, because there are so many allowances
Yes.
and discretionary deductions.
Yes.
That they're the direct taxes.
Okay, and what about the indirect taxes?
Yes, that's the hot topic at the moment, isn't it?
Yes, it is.
In 2019, Bahrain, in line with other GCC countries, introduced value-added tax.
Right.
The highest rate was and still is 5%.
Right.
However, there has been a proposal, unfortunately, to make that 10% from the beginning of 2022.
Right.
In Saudi Arabia, it is already 15%. So
Yes.
it does make sense to reduce that difference, because so many Saudis come here at the weekend.
Yes.
VAT introduction affected SMEs, so that all their systems, their accounting, packages needed to be adjusted and employees trained. There was also an effect on cash flow, which you probably saw.
Yes.
But today now we're a few years into it. The calculation of VAT is a bit of a routine calculation.
It is.
That's done every 1 or 3 months.
Yes.
And 5% is quite low compared to the UK again, which is 20%, and India can be up to 18%.
It is.
And I've also said Saudi Arabia is 15%.
Yes.
There's also a 5% levy on the hospitality industry. So
Okay.
you see that when you eat out in hotels.
Yes.
So if I gave any incorrect figures on the tax percentages, I apologise. It's a very difficult area because
Yes.
actual rates will depend on capital allowances, allowable expenses, etc., etc.
Sure.
In case our listeners are unaware, it's very rare for profits that are shown in an income statement are the same as the profits that are taxed. I
Sure.
won't go into that in detail, but us accountants do know that.
Okay, so that was such a lot of information. Let's take a small break and introduce our breakfast to our viewers.
Okay, please go ahead.
You should ask me the usual question.
Oh, I'm sorry, I missed that out, didn't I? I was so excited
About
talking
VAT.
about this. So what's for breakfast, Anita?
So today's breakfast is from Mado, and this particular outlet I know is in Seif Mall,
Right.
and a couple of other malls as well. I do like their take. It's like a blend of Arabic and Mediterranean breakfast. They have different type of breads, and this is their breakfast platter. So there's all types of eggs, and there is cheese. And one of those cheese is not my favorite, which is the blue cheese. You can smell it, right? Yeah. And there's clotted cream with honey, and there is jams and a lot of other interesting things. Are you excited to try this?
Yes, but since I'm doing most of this podcast, I'm not going to have much time, am I? Only at the end.
Yeah, so I think I'll wait for you and we can try this later.
Okay.
Yes.
So, as the tax regime is quite simple here, there's only a small tax industry, meaning the number and expertise of taxation accountants, advisors, etc.,
Right.
is low. The big accounting companies have some, but not many.
Yes.
So as tax increases, there's going to be a need for more knowledge of other taxes.
Right.
More experts, accountants will need to be trained up.
Yes. Yes.
So let's go to where we might be tomorrow, because that's where we were today.
Yes.
And just a reminder that we're not economists.
Yeah, we're not economists.
There are much finer minds than ours working in EDB.
Yeah.
So we're not aware what government fiscal policy will be.
Yeah.
We can only highlight some possibilities.
Absolutely. I think this has been like a very hot topic of conversations everywhere that I go, and people are talking about this because it's going to affect us a lot,
Yes.
especially after the pandemic. It's where the income has really dropped, and we're trying to just get back on our feet as businesses. So
Well, it affects your cash flow.
it does. It does.
Yes.
Extremely so. So
So, why are we here? Well, two conditions have affected the future of tax in Bahrain.
right.
One, of course, is COVID.
Yes.
The government has been very generous in paying out subsidies, paying for all our vaccinations, while at the same time having their own income reduced because nobody was coming into the country.
Yes. Tourism was so down.
Yeah.
Yes.
In fact, the oil price was low also back
Yeah.
in 2019.
Yes.
So this extra money that was spent on paying private sector salaries, cancelling utility bills, etc., needs to be recovered.
Yeah.
There are several ways of doing that,
Okay.
but most countries are looking at possibly, well, not possibly, other countries are increasing
Yeah,
taxes.
taxes. Yes.
And is it going to happen here? The question appears to be yes. Now, the second condition, and this is an interesting one, for many years multinational companies have been able to transact business in country A, where we say, let's say the corporation tax is 20%, but pay for the profit on that tax in country B where the corporation tax might be 10%.
Okay, so help me understand this better.
Yeah, okay.
Can you give me an example of, let's say, a multinational that's operating in two countries? How does that work?
Yeah, so the one we always use is a coffee shop.
Yes.
So I'm a multinational selling coffee all over the world, retail. I have coffee shops in France.
Okay.
I'm selling to the French there. I'm making profits.
Okay.
But the head office is in Ireland.
Okay.
So the head office are providing services, investment, management expertise to the French subsidiary.
Right.
So, but the sales occur in France, and they're missing some expenses. So we come to a profit in France,
Right.
and we might be charged, for example, 20% on that as a tax.
Okay.
But what we do in Ireland is we make a management charge to France
Okay.
to reduce the profit in France and basically transfer it to Ireland, where the corporation tax might be 10%.
Okay.
So effectively, I'm paying on my profits 10% tax instead of 20%.
That's very interesting.
Right.
It is.
So
And this is like a common thing. Like
it's
people,
yes, it's a
generally,
common thing.
this
In
is how
fact,
it's done.
if you get a very good tax accountant
Yeah.
or divisional accountant
Yeah.
who can move these around, he or she might be the most important person in that company.
Certainly. I mean, this,
Now, the G7 countries, and more than just the G7, are not happy with this because each country wants to get the profits, the tax on the profits that were made in that country.
right.
So recently they've been meeting and setting a minimum of 15% tax rate in every country for multinational entities.
Okay.
We don't know the details of this, but the idea is there that wherever these multinational countries are, they have to pay 15% for the business in that country.
Now they need cleverer tax accountants.
Yes.
Yes.
So actually, I gave you that example, but in France, the corporation tax is 26.5%.
Okay.
In Ireland, it was 12.5%. So as a multinational, I'd be saving half of the profits, half of the tax I would be paying on the profits in France by transferring it across.
Okay.
Now, this was a theoretical example, but it does happen a lot in practice.
Yeah.
It does happen with coffee shops, I'm not naming any, and it does happen with big tech as well.
Okay.
Yes. So this has a practical effect on Bahrain already,
Yes.
because many SMEs are required to submit the economic substance report.
Yes.
That highlights in which jurisdictions they carry out their main activities,
Right.
where they have the head office, where they do the business, where the profits arise.
So is there absolutely no category that's exempt from VAT?
Yes, there's still many here. Children's clothes. You put me in a spot there. I don't actually know what they are.
But there are some categories.
Second-hand car sales, I believe. But there are, yes.
Okay.
So there's an attempt to clamp down on group structures
Okay.
that move profits from high tax areas to others.
Okay.
Could this end up with the G7 countries pressurising low tax countries? So the G7 being UK, America,
Yes.
etc., so that they level up the playing field, so that everybody has to pay, every multinational has to pay 15% in every country? Very possibly. We don't know.
Right.
But you may not know this, and I didn't actually, that there's already some form of corporation tax in most GCC countries.
Including Bahrain?
No.
Okay, thank God.
Only if you're in the hydrocarbons.
No.
So Saudi Arabia is 20%,
Okay.
Oman 15%, However, in most of these countries, the GCC shareholding component of that is exempt. Just
Okay.
means the expatriate part pays for it.
Oh, okay.
So, as we saw a few weeks ago, there's a proposal to increase VAT to 10%.
Yes.
I read that would probably contribute about 1.8%. Oh, sorry, that would raise 3% in GDP,
Yes.
the whole VAT. So that's an extra 1.5% from 5% to 10%. So it's quite a significant amount that the government is looking to raise.
Mm-hmm.
Now, VAT is a tax on consumption,
Yes.
which is mainly paid by individual end users. SMEs net off their VAT inputs with their outputs and then pay or then receive the net from the government.
Right.
So if you do, guys, if you're individuals and you don't want to pay VAT, don't consume. Simple as that.
Right.
But there are still effects for SMEs. Although consumer prices are likely to increase as the additional VAT will be charged to the end user,
yes.
which is the consumer. So we may see prices increase.
Yeah.
But will companies absorb the increase in the VAT
I don't
to
think.
maintain a competitive edge?
I don't know, because I think some people, some brands have big pockets. They may be able to do it. But what about the smaller companies?
Well, we don't know, do we? We don't know.
That's true.
You would get a competitive edge on your rivals if you absorbed the extra 5%, and your rivals did not. But then your profits would also be reduced as
Absolutely. So is that really worth it?
well. I can't give you the answer here.
Yeah.
I would hope that the big supermarkets would absorb that increase if anybody from those big supermarkets is listening to us. But there is also an effect on cash flow through timing differences. For example, if you invoice at the end of October for October sales, you would be paying the VAT on that in the end of November,
Right.
whether you'd received the money
Money or
for
not.
that invoice or not.
Yeah.
That causes difficulty. If you're
Yes.
not getting paid on time, there is a cash flow difficulty
Absolutely,
on
yes.
paying the VAT on your sales very
Yes.
quickly.
That's a big practical implication.
But you must, because if you don't, you can be fined with penalties up to 25% of the VAT you haven't paid.
Whoa.
So that's not fun, is it?
No. Absolutely not.
So the risk of non-compliance and getting into possible cash flow difficulties can be mitigated by implementing strong and relevant internal controls, and that's where M&H
Absolutely.
will support you in this regard.
Certainly.
There's another part of this, and I don't want to go into great detail in it, but Bahrain is part of the Organisation for Economic Cooperation and Development, the Base Erosion and Profit Sharing Framework, which
Sounds very complicated.
Yes, it is complicated. I'll just say where members have agreed to align their own laws with the international tax rules
Okay.
and to follow the framework's minimum standards.
Okay.
Of course, I'm not going to go into those standards, but it potentially opens the door for the introduction of corporation tax.
Oh my God. That's a bit scary.
Yes, so I'll not go into detail in that one. So let us hope that this increase in VAT from 5 to 10%, if it is agreed, will be the only major change in the country's tax regime. One of the things that's happening at the moment in favour of it only being that is that the oil price is increasing substantially, which of course means the government receives more income from that. So long may high oil prices remain, and we hope that VAT at 10% is the highest it will go, and no other taxes will be
fingers
introduced.
crossed. Yeah.
So that's me done. I would ask you how was the breakfast, but unfortunately I haven't had time to eat anything. So
Well, this was an intense topic, so my entire attention was at what you had to say, because there's a lot of things that I got to know today because of your expertise in this area. So yeah, I mean, we're definitely gonna try the breakfast as soon as the podcast is over, and maybe we would write about it on our Instagram.
yes, maybe.
Yeah.
In meantime, if any clients, potential clients,
Yeah.
require information or advice on all kinds of
Yeah.
tax, we're very happy to do that.
Absolutely, absolutely. And this brings to the end of our podcast.
Indeed, it does.
Thank you, Ron. This was really, really enlightening, I must say. And thank you for our viewers for watching our video podcast. Again, if you have any queries, comments, please do subscribe to our YouTube channel and you can leave your comments there, or you can reach out to us on Instagram at mhconsultants_bh. I'm available on LinkedIn at AnitaMenon, and you can definitely connect with me as well. And like Ron said, we are available here for any kind of VAT consultation and any kind of exercise around it, and we'd be very, very happy to assist. Thank you so much for watching.
Thank you.